Yeah, hi guys. This is my next video of a recent trade that I took in this last 1 month, Adani Enterprises. And I'm going to be discussing this trade. Why? Because this is where I made 30 times my original risk. So what 30 times mean? It that if you're risking 1 rupee, you make 30 profit on it. So continuing with the previous video of how to study bases, I'm going to use those same tricks, what I looked for in Adani and why did I buy Adani at what price I bought. So I'm going to be discussing that and how I added, like, let me first show you the trade. So this was 11th July 2022. I bought Adani Enterprises at 2313 with a stop of, like, this was the day. This is the day when I bought with the stop of LOD. LOD stands for low of the day. So the stop was here, which was around 1%. So what exactly did I look for? And let me first show you also, like, this has been going on since that day, like so many tweets on this. It's a full thread available on my account on Twitter. So this is the day when I bought it. My first position was here on this day. So before buying here, what did I see that forced me to buy here? So if you remember the previous video on my channel, which is how to catch big moves studying the bases, let's study the base here before this day. So if you see, this is the entire base formation before Adani, before I bought Adani. So within this base, let's just first study the depth of this base. So it is 21%. It corrected only 21%. Before this was a very, very shallow correction, only 14%. 14% in compare it to the same period, like, let me add when you see this correction, when you see this 14% correction, you see how much the entire index had corrected. When index corrects, let's say 10, usually the stocks will correct way more than the index will correct. So in that sense, this correction was not very damaging. This was a very healthy correction, especially this correction came after this huge, let me show you the, yeah, this correction came after a 55% rise. So when a stock goes up 55% and then corrects only some 16, 17% against the entire market, which is down way more than, uh, like, this is a very, very normal, I would say this is a natural tennis ball action kind of a correction where the stock is doing correction, going through profit booking after this 55% rise. Then after this very normal natural correction, the stock goes up, comes and then gives this very, very massive shakeout bar, which is like it undercuts this low. This is called resetting the base. It's like a lot of weak hands are out on this day, and the stock closes back almost near the day high. Look at the size of the tail, and the closing is almost near the day high. So this is a very, in the morning on this day, this would have been a very, very negative day, but towards the closing, it closed really well. And this added, if this was your first good thing that it corrected only 14%, sorry, 17%, this is the second good thing about this stock is that it is just reset the base and a lot of weak hands are out. After this, it again started going up and then came again, but this time did not really go through the line again. So this is also a huge, it just consolidated, not even touching that line. So somewhere this line is holding true, and this time it held. This is a higher high formation. Clearly, if you see this time for 3-4 days, it just did not go through this level. And now it's a stock is making higher highs. This low is also higher than this low. So clearly now, if you understand the price action here, it is slowly, like this is the third time it's showing that buyers are in control here. This first point was 17% correction, which was normal. Then this second point was this resetting of base. The third time it did not even touch this line, and now the fourth time it's making higher highs. So all three, four, I mean, all these clues are telling me that this stock, this base formation is very healthy. So I should be paying more attention. Like this goes into my focus list as discussed in the previous video. And now, like these 4 days, look at the volume has also contracted a lot. And I have 4 days of very tightening action. And if you pay attention, last 3 days have had higher closings. This closed higher than this day. This stalling action, not a, like a massive, this is very neutral, but just look at the closing is a little higher. And again, third day higher. So you have 3 higher closings, so kind of accumulation is going on. And overall, we have had 4 clues. So this is kind of where you, as you all know, that this is where this is like my, this is how I select my stock. And this is where how I select my entries, like in those stocks, like this is the time to actually execute the trade. So one major point I want to add, why Adani got the priority. And if you go and notice that around these dates, I was playing small on my other trades, and I played more than what I was playing on my other trades. I played, like I invested more money in this stock. What is the reason? Why did I do that? The main point for that is you need to know the character of the stock by looking at the history. Like just go back and see when Adani moves, it's a very, very linear stock. When I say linear, it moves, I mean, it moves very smoothly. Look at this move. In this entire move, you don't see many big days. Big red days. To see the how smooth the trend is, look at how smoothly it has been surfing these averages. Let's go a little back further. Even here, you have so many green days in a row. You have like 11, 10 green bars in a row. Let's go further. Again, you have 6 bars, green bars in a row. Again, so many green bars in a row, smooth. So it's not the first time. Again, look here. One stock, so many instances where it is showing that when it moves very, very smoothly. So based on this character, knowing that, being aware of how your stock moves, is it a very choppy stock or is it a very linear move? You can like decide to give priority if it is a very linear stock. So when this time came, so when I bought it here on this day, I did extra size. One, because I know the character of the stock is it's when it moves really smoothly. So if I have there's a high probability that when I get an entry, it will just take off and not look back. That was based on the history of the stock. Second, it's a very, very liquid stock, even though it's a huge 4-digit stock. But if you see, the volumes are 1.7 million. Rarely you see that. For a size, I mean, price, this stock price, unless it's an A grade or nifty stock, that's a different story. But usually you don't see that. So if someone wants to do size, the major thing, the first thing that you need is liquidity. Easily get in, easily get out. So everything was there, everything aligned. And if I don't um, take a chance here, then you're not really, I mean, that's a waste of opportunity. One more thing I forgot. Another thing that led me to see this trade and do sizes, look at the context. When you're coming, this is a base. This is a U-shape cup. Like every stock goes through this sort of a correction and then starts climbing up and then gives a breakout. This is how markets move. You can go and study all your stocks, all your winning positions. This is how they move. So when a stock is coming out of a base, if you manage to buy a stock right at the point where it is coming out of the base, this is where you get big moves. If at all you want to make one like 20, 30, 40 times your risk, you have to buy when the stock is coming out of the base. And when you do that, if you manage to do that, then resist the urge of booking profits immediately, because your objective is to not make profit in a day or two. Your objective is to ride the whole trend and maybe move mountains. Like if you manage to catch the whole trend, the kind of money that you can make from that one trade, you may not be able to make from many small trades in many months to come. So when I bought Adani on this day, I knew that I've got a great entry because it's coming right out of the base. Base formation is very healthy. The character of the stock is very, very smooth. And one last thing is, on this day, this is 11th of July. This is how we were placed on Nifty. So I don't base my decision where we are as on a daily basis, but just look at the context. We had just had a massive correction, and now we not extended on the index. We just started moving. So if I were to get 1:30 or 1:, like if you really want to make 20, 30, 40 times your risk, this is the time when you when you do that. Because the stock is just coming out of the base. You have a very, very healthy formation, base formation in that stock. And the entire market is also coming, has just started to rally. Markets are not extended. Or like majority of the stocks, if you go and study on around 11 July, they just started their move. So now everything was aligned together. And when you have that, and if you get a trade right at the right time and then you don't sit on it, then it's a waste of the whole so many things, and you rarely get those so many things together. So this was the whole idea. So when I bought it, this was the first entry, and then I decided that at least I will give it 2-3 days and sit. I mean, I'm going to sit on it. I will not really. I will fight the urge to book profits early. So the next day, I had a very, very narrow range day, which is very, very positive because this is very neutral. A lot of people bought here, hardly any profit booking. So that's a very, very healthy sign. The next day also, again, hardly any profit booking. And if you see on this day, 14 July, I bought some more. On this day, yeah, I bought it around this level. I added to my winning position, which was already holding very strong from the last 3 days. Understand the mindset. I'm adding to my winner. When I say winner, I mean I have something that I bought right at the base breakout. And then for the next 2 days, it fought all the market forces and it stayed strong. So this is something that I want to add on to because it's really doing very, very positive action. And why I'm adding here on this day is because if I really want to add something, I want to add as early as the in the trend, so that I'm not buying an extended move. So clearly, this is the base breakout, and I'm buying only here. I'm not buying like the previous time. This was the base breakout. I'm not, after buying on this day, let's say, I'm not buying here. So I'm buying within in a day or two. I'm adding because last 2 days were also very strong. So on this day, now you'd be wondering what did I look for on this day? So this is 14 July, and this is also I look at the 4 hourly charts. So let's go to, yeah, this is, so this is the bar of 14 July, the morning bar. Usually 4 hour charts have 2 bars only. So one ends at 1:15 and then the second ends at the day end. So this is how the first bar closed on that day. And then imagine that this is a day chart. Is this not a tightening action? This is also an arrow range. This is also very healthy, higher closing. So when during the second half, when it started moving, I just added. There's no, there is no buy above this, buy above that or something. I just added because I'm reading the price action. I don't have to wait for some level to get taken out. I just bought it because so many clues have shown that I bought on day one of the base breakout, and for the next 2-3 days, it held really, really strong. And then towards the closing of the day, which is where if the stock is moving in the second half, usually you get the trend going on to the next day also. So because I got it in the second half, I was willing to add more here, and I added. on this day. Now, on the next day, I have again a very, very minor action, but again a higher closing. Another high closing. On 19th July, I added more. On this day. Why? Why did I add on this day? So if you see, and again, there is, you have to read the action here. So what happened was on this day, day before the day before my third buying, Adani closed here around 2423. The next day, you have a gap down opening. It opened at 2406. And that was the low of the day also, like almost that 2405. And then it started reversing immediately. If you want to go and see the how it looked, though I don't use the intraday chart, like this is why I don't really, I avoid it because then you all get into the habit of looking at that. But just to explain you the context on this day, this is the morning bar. So the closing was here, price opened here, gap down opening, but almost immediately it entered the previous day range. So what it means is in the morning there was selling, and whatever minor selling was there, buyers came rushing in. The low of the day was also almost the open, which is what I look for, open and low almost the same. And the price just entered the previous day. And again, around this level, I decided to add third buy on this day because, like I said, I know. One second. Yeah. So, as I said, I know that the stock has just given a base breakout. Markets are also have just started moving up. The stock is also very linear. So, if I really want to make a lot of money, this is the time. And when the time is really good, then you need to press really hard. So, I had decided that I want to load as much as possible without risking too much of my portfolio for a gap down or something. I want to add as early as in the trend so that I can make most of it. So this was my third buy on this day. Yeah. And then I kept selling on the way up in very like at regular intervals, which is selling to strength, which deserves a specific video for that, but not in this video. But I kept selling, and I rode it all the way. This is August 17, which is this day. This is where I was out of my entire position and made 30 times my risk on the remaining last portion. Whatever I had left, I made 30 times on it. How did I ride it? If you just see, add 10 moving or 20 moving average to it. All the way up from this to that level, it has never touched 10 moving average. So I had, because as I because I knew the character of the stock. Look at the past also. It has when it has moved, it has usually moved along 10 moving average line. Here also, this big move came. This was along the 10 moving average line. So I was trailing it. My stop was below this line. So again, when I say you trail with 10 moving average, or some stock will respect 20, some will do 10. So you have to study it. You have to see it, which one it is respecting. And there's no one magic moving average line that is the answer for all your trailing problems. You have to understand the character of that stock. This one is so strong. Probably it's moving along the uh, five moving average line, which is not there, but you can add it, and probably it's moving around with that line. So this is how this stock moves. It's a beast. And all I had to do was, because I got a good move, all I had to do was place my stop under this 10 moving average line and ride it. And every time I had a change in character. When I say change in character, I mean when I had small days, that was fine. But on almost all the big days, like these are big days, I would exit some position, because that's a change of character. And it's, especially if you see now in the last 3-4 days, the angle of the rise is also shifted. It's like almost screaming that I'm tired now. And this is, I have shown it multiple times on my account, that these are the signs when you should be selling into strength. And clearly you see the evidence is like, it's evident now. So this is how I rode this stock, just by trailing, placing my stop under this line. Only because it's not that every stock will respect this line. This was respecting it, so I decided that I will just place my stop here. And it was one of my easiest trade. Like I mentioned also, by far one of the easiest trades to come to me. Why easy? Because it just kept going up and never hit my stop. Just went up. And with 1% stop, you can do the math. 3015, and I bought around 2313. Whatever portion that I was left with, I made 30 times on that portion and 25 on some portions. So like that, I was selling on the way up. And this is how I got a good move. And if you really want to move your small account and grow it faster, you have to sit on your trades and find 20, 30, 40, 50 times your risk. 1:2, 1:3 is not really going to move anything, because unless you're doing very, very big size on those on every trade, which is not really possible on every trade, because when markets get choppy, you're forced to reduce your size. And if you don't reduce your size during the choppy environment, you will be finished sooner or later. So this is how I got the trade, and then added on the way up early in the trend. I did not add here. I could have, there were entries here also, but in hindsight, it's easy now. But even these 3 entries moved my account by a good amount. And these are the signs that you need to look for. And when you get them, the major thing that you need to work on is resist the urge to book profits early in the trend. Right now in this market, if you go and study, so many stocks have done this. So many, like there are many moves which have gone up 50 times, 20 times, 30 times your risk. All you had to do was buy them and then sit on them, which is a behavior trait that you need to learn to just like fight the urge to book profits early in the trend. So this was the whole video on buying Adani. How did I buy Adani out of the base, like on this base breakout? and added on the way up and then rode it all the way to this level. I hope you like this video. If you have any questions, you can ask me in the DM section. Like you can ask, like comment below on the video or ask me on Twitter. Thank you.